I had someone who used her equity to take her neighbor, who became more like a granddaughter to her, on a trip around the world. So she took her granddaughter on a trip around the world after high school and came back and bought her a car. And that's what she used some of her reverse mortgage for. I think we just kind of get that, again, that tunnel vision of, oh, I need help, so that's why I need a reverse mortgage. No, go buy a second house. You can use it for that too. So lots of different options.
Let's just get right into it, Heather. What on earth is a reverse mortgage?
So a reverse mortgage has such a stigma to it.
Yes.
And even I was driving here and talking to my brother, and he was like, what are you doing? Reverse mortgage. And I was like, oh, here we go again, right?
Yes.
So a reverse mortgage is actually a great product, and it's changed since way back in the day when I think the stigma originally came. So a reverse mortgage is basically for our seniors. It is for those who are over the age of 62, that they can tap into the equity that they've already gained in their home. So they can use it for either to not have a mortgage payment anymore, or if they need additional income, they can tap into that as additional income. So it's a great product for our seniors to help them or go have fun.
Amen to that.
Right.
Which good for them. So speaking of that stigma, though, right, I feel like if you're a child of one of these seniors and, you know, if my mom were to come to me tomorrow and be like, we decided to do a reverse mortgage, I'd be like, you did what?
Yeah.
Why is, you know, what are your thoughts that way? Should I be thinking that way as a child? And because, I mean, I want to be able to inherit that house too. What does that look like? What are your thoughts on that?
So again, my parents did a reverse mortgage. And obviously my little brother doesn't remember that based on the conversation we had. But we had the conversation with all of my siblings as far as their house was paid off. It was like, okay, let's just do this and have this if there's an emergency or we need to use it for something else.
Yeah.
So when I first presented it to my siblings, one of my sisters was like, no way. And I go, okay, what is your reservation on a reverse mortgage?
Yeah.
And she goes, well, the bank's just going to take the house. And I was like, that's the big stigma that I think everybody gets. And that's not the truth.
Okay.
When the borrowers or your parents either pass away or move out of the home as a primary residence, there is 12 months that you get to decide what to do. And it can even go on past that as well. You can decide to sell the home, and if there's a balance, you pay it off, and then the money comes back to the heirs.
Okay.
Or you can decide to just turn everything over to the bank, and they'll take it from there, and you don't have to worry about anything. So there's a lot more options. So I think as far as, right, siblings or in your example, no, the bank doesn't just take the home from you. It's something that you get an active participation in deciding what's going to happen.
Okay. So correct me if I'm wrong here. And again, you're the expert, not me. But if I get a reverse mortgage, let's say I was in that age range and I wanted to get one, am I like getting a mortgage payment from my house every month? Like it's paying me? How does that work?
So you can have it do that.
Yeah.
So there's so many different options. Back in the day, there was only one option really, which was take away the payment and you get so much money.
Okay.
That's changed. There are so many different options. You can do a line of credit where that line of credit continues to grow as the value of your home continues to grow.
Okay.
You can do it where there's a couple different payment options where you receive a certain amount of money every single month for the rest of your life, or a certain amount of money for a certain amount of time. So there's so many different options. So if your parents are, maybe they're strapped for cash, that's a great option that even if it's just $500, they can get $500 for a certain amount of time, or even for the rest of their life. So really, when we have people come in and are interested or just wanting to know a little bit more about what options they have, we actually look at the whole scenario and we can help direct them. Okay, since we're short here, we can pull out a little bit here. We actually had a borrower, it was quite a while ago, but she was riding the bus every single time she had to go to the doctor's, which was a couple times a week. She was riding the bus. She was eating, like, I hate to say it, but cat food. Like, she didn't have money, but she had all of this equity in her home. So what we ended up doing was doing a payment that she was receiving every single month to allow her that in between of what she was getting from Social Security, to a little bit more money each month to help her just live a decent lifestyle, to be able to get some good food for her.
Yeah.
So it can be a vast change in a quality of life.
Yes, I love that. Oh my gosh, what a sad beginning and an awesome ending.
Oh,
to
yes.
a story.
She was so sweet. And it was, when you get to help someone in that way, it definitely is a tearjerker for sure.
Yeah, absolutely. Yeah. I love that. So when we've done said reverse mortgage, again, one of the things that we always have to ask, right, that I'm always curious about when we're talking about these different financial tools, which a reverse mortgage is, what do the fees look like on this?
So reverse mortgage fees are a little bit more than your forward mortgage.
Okay.
And the reason why is because I try and get everybody to think of a reverse mortgage as a long-term loan. Because if you're not going to stay in the home for 5-10 years, it's not worth doing a reverse mortgage. So we want everyone to think of, if you're going to do a reverse mortgage, you're going to be there for a long time. And that's why fees are a little bit more expensive. So a reverse mortgage is insured by FHA.
Okay.
So you're going to have your FHA fees, which is your biggest fee.
Is that Federal Housing Administration
Yes.
Association?
Good job. Look at you.
Okay.
Yes. So it is insured by FHA. So you're going to have that fee, which is probably the biggest fee.
Okay.
But then you have any other like third-party fees, which is going to be your appraisal. If the title company is going to charge fees, it's any of those additional third-party fees. And then we charge a few things as far as a credit report goes, origination fee and processing fee. Okay. So yes, fees are higher, but I just like to help everyone think long-term. We're going long-term. It's not something that we're going to redo here in 5 or 10 years. No, we want this to go long-term.
Okay. All right. So, but taking into consideration if a reverse mortgage is right for you, that time frame is important then.
Yes.
Okay.
Yeah.
Okay. What on average, and maybe you can't answer this, what would be the minimum amount of time that you would suggest someone get a reverse mortgage for? Is it just so case by case basis that
it really is a case by case basis? I would just make the recommendation that if you know you have sufficient amount of equity, because that's another really big key piece with a reverse mortgage. If you know you have sufficient equity and you have no intention of moving within the next 10 years and you're of age, do a reverse mortgage. Even if you don't need that additional income or you're making enough money to make a mortgage payment, do it anyways, because it's not going to harm you. You can continue to make a mortgage payment even on a reverse mortgage. So if you have a balance and you want to pay that down, you can. So it's just a really good option to help you have just a little bit more flexibility in your later years. I had someone who, they weren't my borrower, but someone who used her equity to take her neighbor, who became more like a granddaughter to her, on a trip around the world.
Oh my goodness.
Right? I was like, man, can I live next to you?
I know. How do we sign up for neighbors like that?
Right.
Not that I don't love my neighbors. But.
Right. When I heard it, I was like, oh my heck. So she took her granddaughter on a trip around the world after high school and came back and bought her a car. And that's what she used some of her reverse mortgage for. So there's so many different options that you can use it for that I think we just kind of get that, again, that tunnel vision of, oh, I need help, so that's why I need a reverse mortgage. No, go buy a second house. You can use it for that too. So lots of different options.
Okay. So it's just really another, again, tool to help me with financially. Yeah. Okay. Yep. Very, very cool. So Heather, we've talked a little bit about, one of the common misconceptions with a reverse mortgage is that the bank takes the home, right?
Yeah.
After they're passing or whatever that looks like. What are some other which we know is not true.
Yes.
Let's clarify that. What are some other misconceptions regarding reverse mortgages?
So I think a lot of people worry about their Social Security income that they receive.
Yeah.
Am I going to lose it? No, it doesn't touch that. A lot of people think, do I have to pay taxes on it because it's income? Nope. You don't have to pay taxes on it. It's already income that you've paid taxes on, right?
Yeah, that's a good point. Yeah.
Yeah. So a lot of people get worried about, well, I've got this income coming in. Is it going to affect this? Do I have to pay additional money? No. Nope, you don't. The other big thing is we've kind of touched on it is it going to leave my heirs with a load of debt?
Right.
No. The heirs can decide not to even touch it, to just turn it over. And if that's the case, that's fine. The lender takes over at that point.
Okay. So another question I have with that, though. So let's say I have a parent who takes a reverse mortgage. They live in that thing until they die several years after the reverse mortgage, let's say, quote unquote, runs out. If they do, I don't know. You can clarify that. Do I then, in order to have the property, pay that back? What is that? What does all of that look like?
So if you decide to purchase the home, yes, you're going to pay what that has been lent on the home.
Okay.
So yeah, if that's something you and your siblings decide and you want to buy them out, you're going to pay them out and then pay whatever is left on the loan.
Okay.
So yes, you would have to pay off that. But if you decided to just walk away from it, you can walk away from it. It's not going to hurt you at all.
Okay.
So I think that's the other big thing is, oh no, that debt falls on me. No, the debt doesn't fall on you. It is, at that point, it's a non-recourse loan. So it just goes.
So tell me what a non-recourse loan means for those of us that are not decades into the mortgage industry, Heather.
So a non-recourse loan is something where they can't come back to you as heirs and say you are responsible to pay this.
Okay.
There's nothing that they can come back on you to pay. Also, as the owners of the home, they can't come back and say you owe us this many payments. There's no payments on a reverse mortgage. That's what makes it so good. So just knowing that there's on a forward mortgage, obviously there's recourse. If you don't make a payment, they're going to come after you and
essentially take your home.
Right.
Yeah.
It can be foreclosed upon. This is not that case.
Okay.
So yeah.
Yeah. It really is just all that in reverse, I guess, now that we say it that way, which is bizarre to me. Okay. All right.
Different way to think about it.
Yeah, it is. It is. Anything else? Any other misconceptions when it comes to a reverse mortgage we need to be aware of?
So I think a lot of people also stress, well, what if I leave my home? What if I'm a snowbird? We have snowbirds here in Utah, right?
Absolutely.
Where they're here during the summer and then they go St. George, Mesquite, somewhere much warmer.
Absolutely.
Right. During the winter. So in order for a reverse mortgage to stay a reverse mortgage and meet that, you have to live in the home for at least 6 months and 1 day out of the year. Okay. So if you go down for a season down to, Snowbird, wherever you're going to go, if you're there for 4 or 5 months, you still meet that requirement.
Okay.
So it's just living in the home as your primary residence for a minimum of 6 months and 1 day.
Okay, awesome. Mm-hmm. And is that like an extended amount of time for the whole time of the reverse mortgage? I have to do that?
Yes.
Okay.
Yep.
Okay.
So that's part of, because it has to be on your primary residence. It's not on a second home or an investment property. It is on your primary residence.
Okay. So would it be possible, I'm just thinking of my parents in this scenario. I have a brother that lives overseas. If my parents wanted to go stay with him for a year, can they do that?
I mean, then we run
into
the
extended leave. Like, can they take a leave from their primary residence? What does that look like? I don't know.
So at that point, we're not meeting that requirement of being there for 6 months and a day.
Okay.
So that's why at that point, it would no longer be considered their primary residence because they've left it longer than the 6 months and a day.
Okay.
So that's where, So if anyone who is looking to do a service mission of some sort, that if you're gone for longer than that period, then we're just not meeting that qualification.
Hold off until all of your long-term traveling is finalized.
Yes.
Okay. Fair enough. Why? So you mentioned 62 is the magic number when we can qualify for these. I'm confused a little bit. It totally makes sense. We're using our home's equity to enhance our lifestyle, whatever that looks like, right? Whether it's through investing in another home or making it so I don't have to eat cat food, whatever that looks like. If I'm still making mortgage payments and I don't fully own the home, how does that work? So I'm just using the equity that the home currently has?
Yep.
Okay. All right.
So that's why part of the mortgage process is making sure you have sufficient equity.
Okay.
Because we want to make sure that the cost of a reverse mortgage is a lot. And we want to make sure we're looking at the time of life remaining. Okay. And we're looking at, okay, if they are going to take term payments where they're getting money each month, where are we at? Do we have sufficient equity to dip into that?
Okay.
Type situation. So one of the very first things we're looking at is looking at what income you have coming in, looking at what debts you currently have, and definitely looking at how much equity you have in the home.
Okay.
We typically want to see at least 50% equity in the value of the home in order to be able to move forward with a reverse mortgage.
Okay. Okay. That's really good to know. So, aside from, getting a reverse mortgage so I don't have to eat cat food. I'm sorry, I keep going back to that.
No, it's a shocking experience.
It is so crazy. Why would someone want a reverse mortgage aside from just supplementing my income?
Right. So my parents, I told you guys, did a reverse mortgage.
Yes. Yeah.
Home was paid off. And my siblings were just like, but why? And my dad is all about investing. And you can use that line, you can use a reverse line of credit as an investment tool. So if you see an opportunity that maybe you want to dip into, instead of trying to get your financing together or worrying about this and this and this and pulling money from different places, it's all right there. You can pull that money. And the great thing is, as I've mentioned before, as your home increases in value, that equity line just continues to increase in value.
Okay, interesting.
So it can get up to $400,000.
So would it just be another appraisal you would have to get that increase, or what is that?
No, it just, as it goes, it grows. You don't have to do anything. You just get to sit there on a pretty line of credit that continues to grow as your home increases.
Oh, cool.
So yeah, it's a great product to be able to use in investments if that's something you need to, an emergency. If that's something you want to do. I know someone who they were both living in the home, and then she got Alzheimer's and had to go into a care facility. And he actually ended up using part of that reverse mortgage, the equity, the money to help pay for her to go in there. Okay. And it was okay because he still lived in the home as his primary residence. So even though she no longer lived there, he could stay and still have access to all of that equity to help pay to take care of her.
Oh my goodness. Okay. So really a huge opportunity.
A huge opportunity.
That's not cheap.
No, those places are not cheap. And it's stressful to think, okay, how am I going to come up with that amount of money every month?
Yeah, exactly. So aside from being 62 and having equity in my home, are there any other eligibility? Did I say that right? Eligibility requirements? Okay.
Those are your two biggest key pieces. Okay. I get a lot of questions of, okay, well, I am 65, but my spouse is 55.
Okay.
How does that work? So in that case, we can still do a reverse mortgage because one of the spouses is primary. So we would do it, say it's a him, we would do it for him, and he would only be on the loan.
Okay.
She would be called a non-borrowing spouse. We'll just say that.
Okay.
And it could be where she can be on the loan, but she doesn't have access to the equity until she turns a certain age.
Okay.
So that's a very common question. Well, I get this, but they're not of age. What's the situation? Can I still move forward? Yes. But if our borrower passes away, the non-borrowing spouse would no longer have access to that equity. So if they came of age, they could do another reverse mortgage.
Okay.
And then have access to the equity.
Later on.
Yeah.
So would non-borrowing spouse, if older spouse passes away, would they be at risk of losing their home?
So no, that's a great question. they can continue to live in the home. They just don't have access to the money.
Okay.
So it's not something where they pass away and now they're stuck and they have to
Okay.
find somewhere. No, they're allowed to continue to live in the home. They just can't access that money.
Okay. Would they need to pay that money back ever?
No,
Okay.
not until if they decide to move out of it.
Okay.
Uh-huh.
Then they would need to.
Then they would need
But
to.
chances are they have other equity that
Yeah.
would cover that. Okay.
Yep.
Very, very cool. Good grief.
Yeah, I know.
That
So many unknowns.
Yes, so many unknowns. Can you get a reverse mortgage on any type of property or just your primary residence?
So just your primary residence. But I
Okay.
think there is a lot of confusion because there's so many different types of homes. So single family, townhomes,
Right.
condos, manufactured homes, all of those qualify for a reverse mortgage.
Okay.
So that's where I think it's my primary, but it's a manufactured home because manufactured homes, if you don't know what they are,
Yeah.
they're typically moved onto site and then they are permanently affixed to a foundation.
Yes.
It's not a stick-built home that you build on site. No, it's
Right.
made and then brought on site and permanently affixed. So with forward mortgages, there's a lot more restrictions with manufactured homes. But with reverse mortgage, there's not that restriction that you have. So manufactured home, townhomes, condos, twin homes, single family residence, all of those qualify for a reverse mortgage.
Oh, awesome. Okay.
Mhm.
That's great news. That's
Yeah.
great news.